bos kami dah beli. Dia tak kasih buat aktiviti kat sini tau.
Apa pun tak nak.
Cik!
Cik, baik! Sekarang ni tempat bisnes aku. Bukan tempat untuk kamu semua main-main. Faham? Aku dengar kamu orang tak letak dokumen yang lengkap. Tak tahu datang dari mana. Kalau mau belajar, kamu pergi cari tempat lain. Diamlah. Jangan buat bising. Customer aku sudah komplain.
Saya faham Cikgu Siti. Tapi budak ni tak ada sijil lahir, tak ada dokumen.
Tak bagi budak-budak ni pergi sekolah kan? Tak apa. Biar aku je yang dekatkan sekolah dengan diorang.
Boleh tak saya tukar apple ni dengan buku tu?
Yang ni? Boleh je. Nah. Tak apa, awak simpan je apple tu, okey?
Betul ke?
Betul.
Terima kasih, Kak.
Okay, so A untuk?
Apple.
B untuk?
Ball.
C untuk?
Cat.
Nah, lah cepat.
Walaupun dia tak ada dokumen, Cik, dia tetap ada masa depan.
Peraturan tetap peraturan.
Kalau dah tak ada jalan lain, Cik, memang masa depan budak-budak ni tertutup selamanya, Cik. Budak-budak ni tak minta kemewahan. Diorang cuma minta peluang. Kalau maksud sebenar raya adalah untuk buka pintu dan hati, inilah masanya tuan-tuan dan puan-puan. Untuk kita buka pintu untuk mereka ni semua.
Mak, shop kita terbakar sebab ada orang buang rokok. Kita kena cari tempat lain.
Mr. Lim, saya nak jumpa awak ke rumah terbuka hari raya nanti.
Bukankah itu maksud sebenar raya?
Pergi. Pergi.
Dulu aku fikir sekolah untuk yang ada. Cikgu ajar ilmu untuk semua. Walau datang tanpa nama, di sini kami semua diterima.
Haji, bye-bye, bye-bye. Tempat ini tempat ini nama orang pakai je. Tapi jangan bising sangat.
Cikgu, okey? Ilmu yang kita ada, kita kena kongsikan dengan semua.
Tahun depan boleh tak saya ajar budak baru?
Boleh.
Terima kasih, Cikgu.
want my kids in Jockey to become the future. They can be proud of themselves telling that I am the street children that came out from the Puja Jockey. And I'm here to change humanity. I'm here to change how people live. Okay, done.
Hi, morning everyone. Welcome back. Welcome back to Morning Kappa 8. Aiman here. Right, so looking at the S&P 500, well, it closed higher on Wednesday session, gaining about 0.8% to close a record high of to close at 7022 points, with strong buying interest throughout the session yesterday. So this was driven by growing optimism that the tension in the Middle East could ease after comments suggesting that the US and also Iran talk may resume. So this also helped to improve the risk appetite and push the equity higher. Right. Also, I believe that the market will also supported by strong expectation from the upcoming corporate earnings, with investors positioning ahead of results, especially from the I would say major companies. So overall, this move shows that the investors are becoming more comfortable taking risks again, even with the geopolitical uncertainty still in the picture, right? So technical wise, after the index is now above the 7,000 psychological level, next target should be 7,100 resistance level, right? Looking at the China A50 futures, well, it closed slightly higher yesterday, posting a mild rebound after recent consolidation. So I think the overall sentiment is still cautious, but with some buying support coming in. So I think the upside was mainly driven by selective buying in the large cap Chinese stocks. Investors also look for, I would say, opportunities after the recent weakness. So at the same time, the ongoing development in the China's capital market also helping to improve the overall sentiment and also the liquidity outlook. So however, yesterday's gain remained limited as the investors are still cautious on the broader China economic outlook. So looking ahead, I think these China A50 futures is expected to remain range bound with slightly upside bias. So in short-term direction will depend on the policy signal and also economic data from China, while the overall sentiment is likely to stay cautious. So for now, the market is still in the gradual recovery mode. Also, as for the WTI crude oil futures, well, it closed slightly lower on yesterday's session or Wednesday's session, easing after the recent gains, right? I think the overall sentiment still remain cautious. The pullback was seen after the growing optimism that the tension in the Middle East could ease after the signals of resumption of negotiation. So this somehow reduced the concern over the supply disruption and also led to some selling pressure in the oil prices. And if you see here, the market started to remove the part of the geopolitical risk premium, which had previously pushed the oil price higher during the conflict. In terms of the technical, the price is now hovering at the $90 level support and potentially rebound if the bullish move to persist or to continue, right? So, however, if this $90 level support is broken, or the key level is broken, we shift our negative trading bias to a positive, right? And also looking at our local market or Malaysia market, right? The FVMK LCI closed lower, declining by 0.28 points to close at 1683 points. while the FKLI also traded weaker yesterday. I mean, the overall sentiment was still cautious with gains heading towards the close. I think the market is actually open stronger yesterday and tested the high levels earlier in the day, but profit taking emerged in key index heavyweight, particularly in the financial and also the utility, which dragged the index into negative territory. Right, so I think there was also some pressure from the softer crude oil prices, which weigh on the energy-related names, while investors continue to rebalance, those portfolio after the recent gains. So yeah, despite the consolidation of the market, I think broader participation was still firm, suggesting that this is more of the I would say rotation rather than a full risk off move. So looking forward, the market is still expected to remain in a range bound move or range bound trading session with a cautious tone. So we may see some selective buying in those uh, mid to small cap stocks, but upside still could still limited due to the ongoing profit taking of wheat. Now talking about small cap index, right? If you look here, recently the small cap names garnered some tension, propelling the index higher to test this key level at 15,300 level, point level. And also, if you notice here, if the index have crossed above this 21-day SMA lines, aiming for this 50-day SMA lines, indicating that the short to medium term trend is bullish. Now, if you look at the heat map right here, right, we know that the FUM KLCI trended lower yesterday. As the weakness in key utilities and also some selected banking names, particularly in Tenaga, right, CIMB as well, weigh on the sentiment despite the mixed performance across sectors. So gains in the industrial and also transportation stocks such as Gamuda, we have AAX right here, along with strength in selected tech counters, help to cushion the downside as well. But still not enough to offset the broader selling pressure, right? So in terms of our Malaysia trading stocks for today, we have IGB REIT, right? So the stock is forming a breakout formation higher at 280 cent level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to travel to test the next resistance at 3 ringgit, followed by 3.20 ringgit level. So if the stock to clear the 2.60 ringgit support, this could reverse the course, also crossing below this 21-day moving average. Next we have Vitrox. So the stock's also experiencing a breakout at 4.75 ringgit level. So if the stock to remain bullish, we're expecting the price to reach 5.10 ringgit in coming session. Second resistance is at 5.35 ringgit level, right? So do keep an eye at the 4.50 level for any attempt of reversal. So we have two breakout stocks here, which is IGB REIT and also Vitrox. And lastly, for the FCPO, well, it closed slightly higher yesterday, rebounding from the 4,400 support level, with some buying interest coming in after the recent bearish movement. So the rebound was mainly driven by the technical buying and also the bargain hunting as prices held above this key support after the pullback lah. Also at the same time, there was some support from stronger crude oil prices and also expectation for better demand from India. And also talking about India on the supply side, fundamentals are also supportive with Malaysia inventory falling to 7-month low, with could help to limit the downside pressure. However, I think the upside remains capped as the market is still facing a weaker near-term export demand and also the improving production outlook. which keeping traders cautious as a whole. So moving forward, following the strong rejection and the support, a strong rebound and the support, the FCPO is expected to rebound higher to test the immediate resistance level at 4,800 level. Right, so I'll stop here and pass floor to Alex. Thanks everyone and happy trading.
Thanks, Aiman. Let me just share the screen, yeah. Okay, I hope you can see what's on the screen. Good morning, everyone. Thanks for joining Morning Kappa at 8. We published our second quarter market strategy piece yesterday afternoon. And this comes on the back of the economics outlook that was published the day before on Tuesday afternoon. So essentially, markets are all about the ongoing US-Iran war, and the war is all about the price of oil. Because everything boils back down to it's all about the oil, really. The higher for longer oil raises the risks of the Fed, US Fed turning more hawkish. Higher global inflation, possibly slower global growth, raises the stagflationary risks, and higher inflation reduces disposable incomes for everybody, for all consumers. But I think right now, with what is happening in the Middle East, yes, the first round of talks failed. We are now in the middle of the ceasefire, which seems to be holding up for the most part. And I think markets are taking the view that there is an increasing chance of a potential more permanent peace environment being within reach. I think nobody should be overly surprised by the fact that the first round of negotiations in Pakistan between the US and Iran that ended without any kind of agreement being attained. That shouldn't come as any surprise, given that both sides were probably trying to establish, where the hard lines were on either side. And I think right now, what we've done in terms of the outlook, while we can never predict how geopolitical events will pan out accurately one way or another, we have worked on some scenarios, and this is the scenarios are as what our economic colleagues have established in their own report. So we have a base case scenario where we are looking for the ceasefire to hold, oil prices to come off peak, and the Straits of Hormuz being reopened. Now, this we have assigned as a 60% probability. There's also a 30% probability, a worse case scenario, where fighting continues, and the re-escalation of the situation develops, and things get much worse than what they already are, with more damage to regional Gulf oil and gas production infrastructure that could lead to a much riskier kind of outlook for global economy. So that's a 30% policy probability there. But I think right now we are working off a base case, and I think if you look at the U.S. markets, they are now about 1-2% above where markets were before the war that started on the 28th of February. And I think in the last 2 weeks, U.S. markets are up, 10%. And I think right now we, locally, markets at around, high 1600s. We are just below the closing of the markets towards the end of February. And I think right now, investor reaction has been relatively rational. Sure, some chips have taken off the table. And I think, markets are, there are trading opportunities in the market, and buying opportunities, for certain stocks that have been bashed down. So, so our forecast and market outlook is predicated on the base case scenario. And to that end, we have not changed our year-end KLCI target of 1780 on the expectation that this conflict in the Gulf will not be overly protracted. But of course, we can never be too accurate when it comes to these kind of forecasts relating to geopolitics. So we think that the base case scenario will hold, and I think on that assumption, we would be looking to buy on weakness and take the opportunity to look at stocks that have been bashed down and take a more medium-term kind of angle. We also think that a somewhat defensive stance for investors is not. We should maintain some defensive color in our stock portfolios. And if you look at this report, we have some ideas of where the defensive sectors will be. We will be looking at telecommunications, energy, healthcare, consumer, REITs, and so on. Those kinds of sectors. I think ultimately, if you look back at our 2026 market outlook report that we published back in December, back then, we obviously couldn't have predicted this blow up in the Middle East. But I think our core investment stance promulgated in our 2026 report, market outlook report, centered on investor circumspection, a trading mentality, a buy and weakness, strategy, and a basic defensive investment stance, and really, that kind of approach remains applicable even today. And I think we would be looking at opportunities to buy and weakness. But of course, in a worst case scenario where the situation quickly re-escalates and gets worse, and in a situation where investors capitulate and start panic selling, then in the report, we also, for the stocks that we are recommending, we also have derived what we call a floor valuation, which means that these are the all-in kind of price, and if the share prices of the stocks reach the floor levels, then they are levels at which our analysts will be highly convicted to buy and to take positions at those levels. So we would be looking at the floor values as some sort of a worst case all-in kind of pricing level. And I think from the overall market, historically, if you look at we have a chart inside a report that is a 20-year PE band chart for the FBM KLCI, and historically in the risk events, markets have bottomed out at around -2 standard deviation. So if you apply -2 standard deviation to the markets today, we are looking at a floor level of around 1433 points. So if something happens that triggers off mass selling, and if the market knee-jerks down to this sort of level, then there would be levels at which we would be looking to start being more aggressive to take positions. And of course, conversely, in the best case scenario where the peace deal is signed, the war ends, the straits are reopened, oil prices fall down back to below $70-80 a barrel, then we would definitely expect investors to become more risk on. We will be looking at investment emphasis moving away from defensive back into growth, and looking at some of the laggard bash down names that have been the ones that have seen the biggest drops since the start of the war, as those names play catch up. Okay, so take a look at the piece, and hopefully we will be able to re-engage at a market outlook session to be arranged in a not too distant future. Okay, that's it from me. Thanks for joining the call. Let me pass the time to the next presenter. Thank you.
Okay. Hi everyone. So I'll be presenting on behalf of Cogwin. So we recently published a note to resume coverage for LBS Bina. We are still positive on the company, mainly driven by three things. The first is the land bank rationalization. Secondly, the medium-term catalyst coming from Kuasa development, and also the stock's better dividend policy. On land bank, LBS has started to selectively dispose its Johor assets, with proceeds to be redeployed into their core projects in the Klang Valley. So this one is especially for Kuasa development. This reflects a shift towards developments with higher GDP density ratio and better demand visibility. Management has also indicated that they are open to further disposals in Johor if similar opportunity exists. And then Kuasa is expected to be a key medium-term catalyst. The project carries an estimated GDP of around 8 billion, with LBS committing about 1.2 billion in land costs. Importantly, the infrastructure obligations are largely handled by their co-developer Kuasa Land, thus allowing LBS to achieve close to 90% land efficiency versus the typical 50 to 60%. Management also sees Kuasa Land as one of the last residential parcels in Kuasa, sporting scarcity value and long-term pricing power. On corporate matters, LBS has raised its dividend payout ratio to 40% from 30%. This indicates a higher yield of around 8% for FY26. In terms of sales, management is targeting about 1.6 billion this year. We view this as achievable because of their current book order, as well as unbilled sales of 1.3 billion, and the good pipeline of sales launches, project launches in this year. So we maintain our buy call with a new TP of 54 cents from 72 cents, implying about 15% upside from the current price. The lower TP is mainly to reflect the cautious sentiment in the market. So do feel free to look at the report, and we'll see you again tomorrow. Thank you.
Hi, thank you, Aidil. Morning, everyone. This is Vanessa from RHP Warrant team. Okay. Yep. So I will be sharing on some of the warrants that we actually garnered. I would say some of the active volume yesterday. So I guess everyone's looking at my screen. Okay. Yeah. So yesterday we actually see Dufu C14. Sorry, the title I haven't changed. The Dufu C14 with 11.9 million traded. Okay, with a price change of around 11%. So but today's spotlight I'll be putting on SUNMED CD and also MSC CX. All right, so for these two warrants, for especially for SUNMED Medical CD, has garnered very high interest from the investors since we have launched it a few weeks ago, or the last week of March. Right, so and the other one will be MSC CX. So why do I actually spotlighted these two? The reason being is that there's one data that only me we can access, but not the public. We actually see high net selling value, which means the investors are buying and they're not selling for MSCCX and SUNMED CD yesterday. All right, so for SUNMED CD, I would say that it's actually the one of the best warrants currently in the market. Okay, why do I say so? Let me just share with you on the warrant search that is available online. Okay, so normally I will just put SUNMED. So this is the warrant search function on RHB warrant website. And then you put all issuers, so you can actually compare all the Sunway Medical warrants in the market right now. All right, so SUNMED CD by RHB is currently at the money. Yesterday it was at the money because the exercise price is 185 cents, and yesterday closed at around 184 and 185. Okay, so we call it at the money when it's about the same. The sensitivity is only at 1.7 ticks, but the effective gearing is very decent at 5 times. Okay, so if you want to if you want it to be easier for you to compute, right, you just look at the bid price. It's about 10.5 cents. Yeah, so you can compare actually using all these warrant search function. Normally, I will first sort it according to the exercise price to see which is quite close or slightly out of the money, so that the warrant is not the absolute price is not that high. And then I'll look at the sensitivity and also effective gearing. But the fastest way will be after you have identified that you actually want to invest in something that RHB has issued. You can just use this RHB, this live metrics on the other page, warrant metrics. Then you can actually compare what is the price flipping point, like for example CD and CC. And if you're comparing to other issuers, Sunway Medical, then you can actually use their website. You open the metrics and then you just compare whichever what is the flipping point and all. All right, so SUNMED CD, if I compare using the implied vol, it's actually the lowest in the market, which means we price it the cheapest. So it's actually suitable for those who are still bullish on Sunway Medical and then would like to have a very responsive warrant and also with very good effective gearing. While for MSCCX, yesterday we see a lot of people investing in it. All right, so with the exercise price of 180 cents, yesterday it's actually already in the money because the price was around 2 ringgit. So in this, you can actually notice that the absolute price of this warrant is actually higher, right? So it's actually more than 10 cents and all. So but at the same time, it's actually giving quite a good responsiveness, which is about 3 ticks and 4 ticks. 2 ticks and 3 ticks lah. I would say it's actually very responsive. So imagine if you are actually entering at 12 cents and then in 3 ticks, and then you'll be able to exit the position at 12.5 cents. But this is for the case of bid to bid. So if you're getting it in the market at 12.5, then maybe you have to wait until 2 ringgit 8 cents at 13 cents. All right, so this is the warrant metrics function. That's another side note I would like to let y'all know. So if you are participating in RHB Trade and Win contest, or we call it the campaign, so just trade more. You trade more with us, then you'll be able to get more entries for the lucky draw. And if you are trading warrants, structured warrants, if you are trading RHB issued structured warrants, then you'll be able to get 3 times of entries for the lucky draw. All right, so I wish all of you very, very good luck in getting a nice prize. Okay, all right, so that's all from us today. Thank you so much for dialing in. We'll see you tomorrow at the same time, RHB Morning Cup at 8. Thank you.